Morning, Steve Free in Chicago with the morning grain comments. Well, we have a new month, and yesterday's USDA report was a shocker. I think as soon as the market saw that corn acres were going to be lower than the average trade guess, we locked limit up. Same is true for the soybean market when we saw that stocks and acres were also numbers that suggest tight old crop supply. And also that we could also have a negative soybean carryout for 21-22 if you plug in the acres, trend yield, and what we expect the demand to be. So overnight, we've got nearby beans up another 6 cents, while November's up 23 cents. And I think a lot of people feel that that inverse of old crop 1440 versus new crop 1280 needs to narrow. November beans need to rally more than the nearby May or July to try to get more acres. We also note that corn up somewhere around 13 to 15 cents. May near 580, while the December is almost worth $5. And I think we need to keep some kind of inverse there because of the tight nearby corn supply. The stocks number has suggested a higher feed and residual. We know we're going to have more export numbers. So right now, the 2021 corn carryout could be below 1 billion bushels. If we plug in next year's acres and normal demand and a trend yield, next year's carryout could be maybe as much as 400 million bushels below supply. And so both markets need to rally to, number one, ration demand, but number two, try to get some more acres. We would also assume on April 9th that USDA might lower the South American corn and soybean crops. That would tighten global stocks to usage ratio and also offer support to prices. Wheat prices are a little bit on the defensive. There really wasn't anything positive in yesterday's USDA wheat numbers. The stocks were higher than expected. Winter wheat acres were higher than expected, although spring wheat acres were lower than expected. We would probably see some kind of premium of Minneapolis wheat over Chicago and Kansas City. Cash basis should remain strong, and I think that in general we need to go higher in prices to ration demand and buy some more acres. No real explanation as to why the acres were down. Much of the decline in corn was in the Midwest, and that's where we thought farmers would plant fence row to fence row. So we'll just kind of watch weather. Right now, the 6 to 10 day for the U.S. Midwest is warm and dry. We'll see if that has any impact on the winter wheat crop ratings. Spring wheat areas should also remain dry, and if that affects the plantings of spring wheat versus other crops that are higher priced. And then our weather guy yesterday gave a presentation and talked about an anomaly of 1988 might be similar to 2021 U.S., in which late in the growing season, it got dry across the Midwest, the Southeast, and the Northern Plains. We haven't traded that yet. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day, and remember, always treat people like you yourself would like to be treated.